Meta doubling down on artificial intelligence. CEO Mark Zuckerberg announcing the tech giant is pushing deeper into AI and it's going to require, quote, massive compute infrastructure. And that means that Meta is going to build all this out using 350,000 graphic processing units, GPUs, from Nvidia. And taking a look at share reaction here this morning, about 15 minutes into the trading day, you're looking at gains of just about 1.5%. We want to bring in Justin Patterson. He's KeyBanc's managing director, joining us now with more. And Justin, let's talk a little bit first just about what exactly this could mean for the stock price here for Meta going forward, because we know this is a name that certainly rebounded in 2023, shares up about 180% in just the last year. So how big of a catalyst do you see these AI plans of being for the stock?
Yeah, it's a great question. When you look at 2023's performance, a lot of that was the year of efficiency, costs coming out of the business. Yes, you had some revenue reacceleration from Reels, from currency in the back half. But as we look at 2024, this year's really more about revenue growth. So when you see these AI investments coming to the business, that's something that drives engagement on Meta, positions some new revenue streams, pricing growth from the ad side, and really starts to position Meta more as a competitor in that conversation with OpenAI and Google. So we're pretty bullish on Meta's AI moves here.
I mean, coming off of a year of efficiency, I mean, they can't that quickly just go to a year of making it rain on AI, right? So what is the best way that investors can anticipate and kind of encapsulate how Meta Platforms is going to really give or set a theme for this year?
It's funny you say making it rain. They were already making it rain last year. You had roughly $28 billion in CapEx. You already have guidance for 30 to 35 billion. That's a lot of that AI investment. So we're going from, call it slight downpour to bigger rainstorm this year. And you've seen some of that already happen within the AI, within the ad tech stack, where revenue growth started reaccelerating to 20% growth. A lot of that has been some of this AI investment driving better content recommendations, which leads to more time spent within Reels and also gives more opportunities to serve ads and drive that ad growth. So I'd think of this more as continuation of revenue growth, sustaining some of that initial foundation built in 2023.
Justin, looking ahead to the fourth quarter results that we're going to be getting here in just a couple of weeks, when it comes to AI initiatives, when it comes to some of Meta's other top priorities here for the coming year, what's the top thing or maybe top two things that you're going to be hoping to hear or want to hear from Zuckerberg?
Yeah, so one would be just fleshing out this AI strategy some more. So Mark, in his comments yesterday, teased, expect more to come. We will have the latest model, Llama 3, being worked on over the course of the year. There was some teasing of just more connected devices in there. It sounds like the Ray-Ban product's going pretty well. So just how he's thinking about, which inning of the AI investment we're in, what initial returns look like, so on and so forth. So I'd call that the AI bucket. The other side would just be, what is the health of the core ad platform right now? It does look like the ad market continued to recover in Q4. We've seen some positive pre-announcements to start the year. So if this is another year where Meta's putting up, call it mid-teens growth, since you've got tough comps in the back half, that'll be perceived as positively for investors.
It's so funny that you mentioned the Ray-Ban product. For the first time, I actually had somebody, when I was playing drums, come and get up in my face and say, hey, I'm recording you over last weekend. So really interesting to hear that shouted out. Justin, when we think about the wearables, perhaps inflection point and where that could come forward, and ultimately for some of the headset products that Meta is going to lean further into, and Apple, for their same right, is going to lean further into, is it just a rising tide type of situation, or do you believe that there's one that has a better install base, stickier ecosystem that is going to kind of come out on top here?
Yeah, I'd say really early days on that. We're talking, 200,000 or so Vision Pro shipments for initial forecast out there. That's very, very tiny. When we start talking about tens of millions, hundreds of millions of products, that's when this gets interesting. So if we're going back to just the innings analogy from baseball, we really haven't even thrown the first pitch yet. This is more long-term investment versus something you see as big drivers for these companies over the near term.
Justin, let's turn our focus to another company that I know is on your radar or is on a lot of our audiences, our viewers here radar, and that's Netflix. We're going to be hearing results from them next week. You just raised your price target on the stock. Give us the top things that you are going to be looking for in Netflix's results next week.
Yeah, definitely. So the big ones always turn into what is the pace of subscriber acquisitions, which gives a sense of just how many new members are coming to the site and starts to shape a piece of the revenue forecast. The other is pricing and monetization. So in the past, Netflix was really just a pricing driven story. Ad-free product was the entirety of the business. We've actually seen a lot of healthy signs from the ad product, the ad tier, into the back half. You saw 23 million monthly active users announced early January. That's up from about 15 million in the November timeframe. So that's really starting to accelerate a bit more. So as you have both a larger ad-free member base and a growing ad-supported member base, we think that should drive a reacceleration to mid-teens growth over the course of the year for Netflix.
How concerned should Netflix be about retaining their market share when you've got a company in Disney has activist campaigns that are prompting it to achieve Netflix-like margins of 15 to 20% by fiscal year 2027? What type of net impact does that even have for a company in Netflix from your perspective?
I'd say neutral to positive, actually, since in Disney's case, it's got to start seeing more returns on some of these investments, stop subsidizing or stop investing aggressively in content, potentially even license some content. So for Netflix, having more competitors step back on the investment gas is a good thing because now Netflix's content investment can go a little bit further. It's not competing as hard for just signing up new customers. And if there's more content on Netflix to watch versus competitors, that's good for engagement, good for ad growth, and good for supporting price increases.
Justin, great to get some of your insights here on all of these very important tickers that we know our viewers are watching and tracking here closely on the Yahoo Finance platform. Justin Patterson, KeyBanc Managing Director. Thanks, Justin.
Thank you.